Participating whole life is the only vehicle that properly works for the infinite banking tax-free cash growth warehouse strategy. Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy education organization. For the last several years, I have focused on and specialized in the infinite banking concept and the tax-free cash growth warehouse strategy. People ask all the time, are there any other accounts that can be used for infinite banking? The answer is no. Why? Well, first you have to understand what infinite banking is and how the tax-free cash growth warehouse works. And then you need to know how participating whole life insurance works. Then you will understand why no other account can work properly for infinite banking and the tax-free cash growth warehouse strategy. If this is the first of my videos that you are seeing, and let me explain why I keep referring to the tax-free cash growth warehouse strategy. Like most others who have heard about the infinite banking concept, Becoming Your Own Banker, the book of that name written by R. Nelson Nash was the first one that I read on the topic. And from that, I learned the basic concept. But it left me with more questions than it answered for me. So I proceeded to do a lot more research on the subject, on the base, not just infinite banking, but cash flow principles, Austrian economics, sweep strategy, and so on. What I discovered was how all those finance strategies can be incorporated with infinite banking and how incredibly powerful that hybrid strategy actually is. So I named the hybrid strategy tax-free cash growth warehouse, but it is all built around the infinite banking concept. The tax-free cash growth warehouse strategy, simply put, is the application of the additional finance strategies within the framework of the infinite banking concept. So don't let it throw you off or confuse you. Just know that when infinite banking is combined with all those other strategies, it truly is the most powerful finance strategy in history. So back to the beginning. Almost said back to the future. Back to the beginning. What is infinite banking? Infinite banking depends on a cash account that has guaranteed growth from high compounding dividend interest that is not taxed. The account must be accessible like a liquid account and must continue to receive the compounding dividend interest even when leveraged by loans. Any loan interest must be less than the dividend interest that is paid to the account. And leveraging of the account must have no penalties or tax attached to it. You must have the option to feed additional cash into the account, and the account must be protected from attachments, levies, lawsuits, even bankruptcy, and so forth. Those are the attributes that the infinite banking account must have. That being said, and that being the case, pretty much all bank accounts are eliminated right off the bat because no bank accounts pay high interest of any kind. And any interest that is paid to bank accounts is taxable at the current income tax rate. So even if a certified or certificate of deposit, money market account, or IRA did pay comparably high interest, it would be taxed. And they are not liquid. They carry penalties for withdrawals. And if you are allowed to take a loan against the account, whatever you borrow will not be receiving any interest, and there will be interest charges to the loan. So what about 401ks or other retirement or investment accounts? Again, there are penalties for early withdrawals. Any gains are taxed. And here's a big deal. Gains are not guaranteed. In fact, all your money in those accounts are at risk of loss. Okay. So what about other types of life insurance accounts? Term life has no cash value. That's a big zero. No cash value and does not earn any cash value. So term insurance is completely out. What about universal life insurance policies? You know, some agents that will swear that universal life is a great vehicle for infinite banking. Those that sell indexed universal love to talk about how their product can earn substantially higher gains than whole life. And that is true, hypothetically, and certainly not guaranteed. The problem is that for the first several years with universal policies, all the supposed gains are siphoned off to pay for the costs and fees associated with the policy, not the least of which is the 100 to 150% of the total first year's premiums that are paid in commission to the selling agent. Then in later years, even if the market index to which the policy is tied does really well, there's a cap on how much will be credited to the policy. And then there are the management and maintenance fees. And really, in my opinion, there's a horrible fee that is hidden in the framework of all universal policies. And that is the cost of the insurance continues to increase every year as the insured grows older. And that's because universal policies are based on a term chassis. And that increasing cost of insurance will certainly eventually exceed the premiums paid and the index gains, and will finally suck all the accumulated cash value dry. The policy will lapse, leaving you with no cash value and no insurance. Now, participating whole life is a whole different animal. Participating means that the policy enjoys participation in the profits of the company and receives dividends. That's on top of the guaranteed interest rate. Dividends plus guaranteed interest rate equals the dividend interest. And it is compounding, and it is invisible to the IRS. It is not reported, and it is not taxed. And as long as you adhere to the infinite banking concept, accessing the cash value by leveraging loans, it will never be taxed. Currently in 2022, the dividend interest paid by the company we use the most for these accounts is 6%. Let that sink in for a minute. 6% compounding annual interest. Now, according to research, on average, mutual funds, which most retirement accounts are invested in, and including the managed investment accounts and even the self-managed investment accounts, to the average investor over the past 20 years, the gains have been just over 4% annual. And then, of course, the gains are taxed. It's true that the dividends paid on these accounts that we use in the whole participating whole life do fluctuate, but they have paid dividends on top of the guaranteed interest for 165 years in a row. Dividend interest has been as high as 12% in the last 30 years. And the current 6% is the lowest I've ever seen it. I believe you will have to agree that 6% annual compounding interest is definitely high interest, especially in the contemporary financial environment. But that's just part of the story, because even when you have all the cash in your account leveraged and you're using it to finance investments or anything else conceivable, all the cash in your account is still earning that compounding dividend interest, no penalties. Yes, there is some loan interest charged when you leverage your account, but it's just 5% simple interest. Now, I'm not going to go into the differences between simple, revolving, amortized, and compounding interest here. But in this case, well, it seems there's only a 1% difference between the 5% charged for leveraged loans and the 6% paid to your cash account. The actual difference works out to many percentage points in your favor. And that's due to the difference between the simple interest charged and the compounding interest paid. Another interesting advantage with participating whole life is when you take a leveraged loan against your account, you're not required to repay the loan in any certain mode or time frame. You can repay in any amounts and at any frequency. It's entirely up to you. And there are options to constructing your account with certain riders that stuff your account with cash value right away, so you don't have to wait for years while you pay into it before you can access your cash value. That being the case, your cash value begins to grow with the high compounding dividend interest right from the get-go. There are a number of other terrific protections and advantages that are inherent with the cash accounts in participating whole life. And all those factors make participating whole life the only accounts that properly work for the infinite banking tax-free cash growth warehouse strategy. Now, if you found this video to be helpful, this information, please like this video and subscribe to this channel. Also, please post your questions and comments here. And for a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box right below the video here. The link to buy my books on Amazon.com, that link is also below here. And if you'd like to book a free phone consultation with me, the link to my Calendly page is in the description box below. And if you'd like to apply to become a client of ours, the link to that application is also below. We're here to help, and we look forward to helping you. For now, aloha and mahalo for watching.